Hello, welcome to Any Answers Answered for September 2020. Hopefully you have been able to get a break of some sort over the summer and ready for what looks like being a very busy autumn in the tax world. As ever, Tim and I are going to have a look at a couple of questions from the pages of Any Answers. And we start with a question from Sound Advice, which relates to PPR and transferring property to spouse. Fairly straightforward, I think. Client purchased a property in Manchester in his name in 2011 for around about £500,000. He immediately moved in with his wife. They lived there as their main residence until 2016, so a 5-year period. Mid-2016, they move out, start renting the property out, buy another house that they move into that year. Now, 2 years later, the original house is transferred from solely his name into joint names, 50-50, and they're now looking at selling that property for $950, so a gain of £450,000. The question really is all about, can she have PPR? Can she not have PPR? How does that all work? Tim, over to you.
Well, a very interesting question, because the law covering this changed from 6 April this year. I think it's in section 24 of the Finance Act 2020, which changed the wording in the TCGA, Taxation of Chargeable Gains Act 92. Section 222 is the main section dealing with the PPR, main residence exemption, and it's section 222 subsection 7 that was changed with effect from 6th of April. And very simply, where a property or an interest in a property is transferred from one spouse to the other spouse or registered civil partner, there are two points to watch out for if it is a residential property. First, as has long applied, a capital gains transfer from spouse to spouse is a nil gain, nil loss transfer, so deemed to be for consideration that gives rise to neither gain nor loss, and that applies whatever the asset, and it means that the donee spouse, in this case the wife, will assume the donor spouse's original acquisition date and original base cost. However, if we're looking at a property where the main residence exemption could apply, up until the 6th of April 2020, if at the time of the spousal transfer, in this example it's in 2018, if at that time neither of them is occupying the property as their residence, then the donee spouse does not assume the donor spouse's residential history. And that is what applies in this particular case. The wife acquired her interest from her husband in early 2018 when they were not living in the property. And so if today they were to sell the property, the gain on his half share would take into account the period of occupation and give a degree of main residence exemption, but the gain on her half share would go back to the original acquisition date and cost, but for the whole of her period of ownership, real ownership, there was no residential relief, and she will not have assumed his history. So that means that her share of the gain would be fully taxable. Had their transfer from one spouse to the other taken place on or after 6 April 2020, the donee spouse would inherit the donor spouse's, or assume the donor spouse's, period of occupation for the main residence relief, as well as assuming the original base cost and acquisition date. And that would mean that on the subsequent sale, the half share of the donee spouse would qualify for the same main residence relief as the half share of the donor spouse. What some of the posters to this particular question on accountingWEB then raise is the question as to what if today we were to have a transfer back to him of her half share, But just before moving on to that, let me clarify that in the circumstances presented in the original post, I'm afraid that the donee wife will not qualify for any main residence relief, whereas the share of the husband, who owned the property from the outset, will qualify for some PPR. And that is, in fact, what the original poster reckoned, saying he'll get PPR relief on his share, but my understanding of the rules is that as it wasn't her PPR at the time she received her share, she gets no PPR relief. Is that correct? Yes, it is correct. But from a planning point of view, well, what if today, before selling the property, she transfers her interest back to him? Well, we would then be looking at an interest that he acquires from his spouse, and he would then assume her base cost and acquisition date, which of course was his original base cost and acquisition date, but would also assume her residential history. And it's a very difficult one. I don't think the legislation addresses this. Her residential history of the property is the same as his because they moved in it together, but she didn't actually have an interest in it until after they'd moved out. So I just do not know the answer to the question as to whether that particular strategy, which isn't what has happened here, mightn't actually save them quite a lot of tax. It's an interesting one. Actually, it's the original poster, Sound Advice, who says the legislation doesn't seem to cover the specific situation of a property being transferred from spouse to spouse, then back again. And the poster also raises the question of anti-avoidance legislation and doctrine, the Ramsey case. I think that's a separate issue entirely. But yeah, maybe we've identified a loophole, or not a loophole, a gap in the legislation. Be interesting to hear HMRC's view on that particular suggestion.
So an area where we've seen some quite dramatic changes to try and stop loopholes and gaps, there could well be more gaps that have now been found. So as ever with tax, it's an ongoing journey. The second question we're going to look at this month is a little bit of a gift for Tim, and so he will no doubt enjoy answering this one. The question is from MC1, and it is to do with company car advice. Am I alone, says MC1, am I alone in thinking that company car advice to owner directors is a minefield and getting worse? Rules change regularly. That compounds with options seem to make it impossible to cover all bases. VAT, benefit in kind, capital allowances, lease versus hire versus HP, electric versus hybrid, etc., etc., etc. Any template that you could use just goes out of date so quickly, says MC1. The question is, do other accountants feel the same? And has anybody found a product they could use to help them out? Tim, is there such a product?
Well, yes, and it was October half term. I can't remember, maybe 3 or 4 years ago. And I can remember going to stay visiting my sister in Portugal, and in fact taking my mother to visit my sister in Portugal. And what I did during that week was begin the company car planner, which has been kept up to date and which deals with exactly the situation that this poster is asking about. It is horribly complicated. There are so many variables that go into it. And every time I update it each year, I look at it and think, why do I do this? But it does give the answers to the questions that the poster and others will have on whether it is better for employees to be provided with company cars or have their own car, or if you're self-employed or a director shareholder, what's the best way of financing or arranging for a business car. And I should say, by the way, I don't incorporate VAT in the spreadsheet. I stopped there. But all the other factors, all the different costs involved, the capital allowance rules, etc., are taken into account. And interestingly, what comes out of the answers to this particular post on accountingWEB is essentially, yep, it's horribly complicated, but there is one no-brainer, and that is that if it's a wholly electric car, then it's going to be better as a company car because of the combination of the 100% first year allowance and the currently zero benefit in kind. But these days, there are very many hybrids and ultra low emission vehicles where, depending on the electric mileage, the car may well be advantageous as a company car rather than as a personally owned car. But yes, it is a horribly complicated area. I sympathise with the original poster and the others who posted on this thread. But the good news is that we have actually provided the template solution that you're looking for, and we keep it up to date.
Well, I was going to say hopefully useful, no doubt useful to MC1, that particular point. Hopefully also useful to Sound Advice and all of the other posters. Tim and I will be back in around about a month's time to have a look at another 2 questions on the pages of Any Answers. But for this episode, bye-bye for now.